Another common question that people will usually ask is, how much will I need at closing? This particular question is determined by not just your amount you possibly need for your down payment, but also by a variety of different required expenses to purchase the home. Or if you're refinancing, different expenses that are involved with clearing the title and clearing the transaction. On a purchase, we'll talk about that first. So, for example, if you're buying a house, the different factors that determine your closing expenses and what you need to bring in at closing are a couple of very different items. The amount in total is determined based on what loan program you picked and how much you're planning on putting down. In addition to that, there's going to be other required expenses. For example, a title company, a title insurance policy, an appraiser, an insurance provider to cover the home, and a variety of other expenses are going to be factored into the amount you need to bring in at closing. It is usually best to get that rough estimate at the time when you're purchasing the property and putting together a good strategy based on what you're hoping your monthly payment to be will also help with how much you'll need to bring in at closing. In addition to these different things, you will also need to factor in if you're getting any credits from the person selling the home to you. If you have a transaction and you're closing on it towards the beginning of the month, you'll also have to be responsible to pay for that month's portion of the interest. So, for example, if you're closing at the beginning of the month, you'll have to pay at closing for that amount of time in that month that you're using the loan money, so you'll pay more prepaid interest. So therefore, in many cases, if you're looking to have a lesser amount that you bring in at closing, it's typically common to close towards the end of the month, creating less numbers of days of interest. In addition to this, you also need to cover a full year of home insurance coverage prior to closing or at the closing. The reason this is done is to have proper coverage on your property in case of a loss were to occur. In addition to those numbers, you may have some lender expenses that are involved too regarding the underwriting and processing of the loan. As you're setting things up for closing, if an escrow account is required, that also is going to require some funds that get put into there as well. It's typical that you usually have to have 2 or 3 months of money put into the escrow account. The reason this is done is because you might have a lapse in time before you're going to have your first mortgage payment. It's typically going to be at least 30 days or more, in some cases almost 2 months. So therefore they'll put the 2-month amount into your escrow account for your property taxes and your home insurance. That amount of money that you're putting in there is being stockpiled so that way the following time that bill is coming due, the proper amount is in the escrow account. It's very typical to have a 1-month reserve in there just in case if those bills do increase on you, so that way you're not short in your escrow account. These typically are the core components of what you need to bring in at closing. If you have any further questions, please check me out at Bacon Home Loans.